Hello and welcome to the January 27th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by stockcharts.com, simply the web's best financial charts. Today we are featuring Metallico Inc., ticker symbol MEA. This is a $244 million basic materials company that engages in scrap metal recycling and lead metal products fabrication activities here in the United States. Well, when I take a look at the chart here, a couple of things stand out. Number one, you can see that this move that was made in June over these previous tops when we took out about $3.10, notice the volume really coming in on this move to the upside, and it was a straight up move, literally off of the late May lows down around 210 to the late June highs up at 550. The stock really had gone up about 160% or so in a very short period of time. And really what I look at here over the last 5 or 6 months, or the last 6 months of 2009, was a stock that was just consolidating sideways for a period of time. We went up, we put in that initial high up at about 530, 525 or so. We pulled back, and then we simply went sideways for a while. Now when we made the breakout just a few weeks ago in early January, we did break above 5.25, 530. We gapped up above that level. Notice the volume again on that move to the upside. We had very nice volume confirming this breakout. And since then, after making a big move to the upside, the MACD had climbed up, had been reached a very stretched level. Anytime that MACD makes a straight parabolic move up like that, generally a stock needs some time to kind of cool down, relax for a while, and I think that's the period that we're in right now for MEA, kind of that cool down, relaxed period. But notice the pullback here over the last 2 or 3 weeks from $6.50 down about 20% or so off of those recent highs down to about the 5.25 level. Notice the volume was a little lighter on the pullback. We're also still holding well above the 50-day moving average and just now testing what was prior resistance, and now this becomes current price support. So it looks to me like from about 5.25 down to about the $4.90 to $5 level, that would be an area where you might consider accumulating MEA. It is a little more aggressive stock, so it's not for everyone. But if this is the type of stock you like, this isn't a bad area. Again, from about 5.25 down to about the $4.90 to $5 level to consider accumulating the stock. Now, if we break below this trend line, we break below price support, we break below the 50-day moving average, and especially if all of that comes on the heels of some pretty heavy volume, we would probably want to move to the sidelines. So you might want to watch about 475, 480 or so to the downside as a possible stop area, because at that level you will have lost a lot of different areas of support. The last thing I want to mention is the RSI. When the stock broke out back in early January, you can see the RSI climbed up to almost 90. That type of relative strength is unsustainable. Stochastics were up near 100. The combination of both of those really led to some short-term selling, and now I think it could be time to perhaps take advantage of the recent selling. I hope you have enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, be sure to sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.